One.
So the market gets up near the highs for the year, 4,200 S&Ps. Decent earnings season. Big tech, leading the way. Banks, well, not all of them going under. Everything's fine and dandy. Now we got to deal with COVID in China. That's taking a toll on the market today. We got some earnings to discuss, some pretty good earnings, some not so good earnings report. Ivan Feinseth is going to join us at 8:35, give us his take on the market. This is pre-market prep. This is Wednesday. Let's get it started.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders, investors, trading on the lows of the pre-market session, down 19 handles at 41 to 39.75. Obvious support on the downside. We'll talk about that in a little bit. The buck is up 15 cents at 103.53. Trying to get a clear that 103.50 area, the highs from last week. Bonds up about a half a point, 127 and 13 seconds. This is a little bit of a puzzler. If we're worried about China and lockdowns, why is crude up a $1.05 at 73.96? Gold working its way back towards 2K, up 990 at 1984.40. Silver not participating, actually in the red, down about 4 pennies, 23.59. And Bitcoin just hanging out under 27K. It's down $480 at 26,720. Gonna bring in Triple D. Triple D. There's one thing about this market, it will always throw you a curveball. And here we are. We're looking okay. My high for the year call is in jeopardy, and COVID. COVID in China. Now we don't know the extent of it. I heard it could get up to 65 million cases. You're talking about lockdowns. I mean, come on. Are we going to have to go back to this COVID market again?
There's always something to worry about, and there's always something it seems like derailing or chopping us up. One thing we have learned is we don't have to chase for the most part in this market. Yes, there's been a few tech stocks you've had to chase, but if you're chasing the indices, you've been doing it wrong. It looked like, yeah, here we go. S&P's breaking out 415, 418, the 420, and 3 days we're right back into the range again. So, I mean, contrarians are still winning overall. Again, there are some stocks that just have relentless bids, and those continue to go. But overall, it's just more chop, more worries. Are we going back to a COVID market? Not in North America. Absolutely. There will be no more lockdowns, maybe ever. Like, I'm actually concerned if there ever really was a real virus now, they would never lock anything down in North America ever again. So we'd all die. But COVID, are they going to lock down in China? We know they take COVID a lot more serious over there. They're talking about there's a big spread happening over there. This is the worries here this morning. If you look at the China stocks, they are down here again here today. They've given back the majority of their gains. It's just like China just cannot get out of its own way here. I mean, FXI is approaching. We're just going to look at the charts here, but they're approaching the yearly lows here, the 2023 lows. We're just up off of that. BABA has that $80 level we've talked about multiple times. Looks like it's going to get up off it. No, 3 days right back to it. So Baidu has come down right near the lows of the move. PDD and JD continue to be underperformers, continue to leak. It's been a tough investment in China.
Yeah, and just I guess the only slight positive could be, and this is not really a positive, but if they got these COVID issues going on, right? Are they gonna like crank up a war against Taiwan in the middle of it? I mean, it's They got
Silver
a lot.
lining, Joel. I like your silver lining.
Yeah, that's not a very good silver lining, but
War's on hold.
yeah, war's on hold
Or
because
maybe
we
they're going
got
to send all their COVID soldiers
that.
over there because they
I
figure
was gonna
COVID will
say
get them.
that they're gonna go breathe on them, and that's called breath warfare. But
It
Take
is
it easy.
breathe.
Take it easy.
yeah, we're gonna go
Fire
breathe.
breathing COVID.
Hopefully we don't get to
Oh
that
boy.
level, man, because
Okay.
the truth is
This show went
that
right off the rails.
I was
yeah,
gonna
right
say
off the rails
I
there.
was
Let me
just
reel it
about to
back in.
bring Mitch in, and then I made one more comment,
Jolie,
and
bring
now
us back in.
the
Okay.
Bring us
chat's
in
gonna
here,
start
buddy.
railing on us, and oh man,
I want
it's
to bring
gonna
a
get,
twist. I want to bring a
ugly.
twist to it. I know that you guys are focusing on the COVID situation that's going on, and that could be it. But a part of me thinks that it could be maybe two things also, of course. One thing, China related, would be, of course, we saw Micron kind of let go yesterday a little bit. It did bounce, right, after the news on Monday. But today, you see it, it's actually down below those levels. And I'm going to watch to see if this starts to really get hit. Because one of the parts that I think could really kind of affect is, do we start to see this start to show up in other tech stocks? Does this cause more of a tech profit taking moment? And that's what I'm looking at. That's why I started betting. I talked about it on Monday that I would look at the semiconductor equipment stocks. I shorted Lam Research, still in that trade, and going to look to see if we're going to see tech turn around. Nvidia started a little bit of a turnaround. Of course, these have been the strongest stocks. So we got to really kind of look to see if we get that continuation turnaround. The other thing that I think could be happening here, and it's my kind of question for you guys, would be, will the outlook, of course, on the debt ceiling get worse before the solution comes?
Yes.
Right? And I think that that's what we're also seeing here, that like the outlook at least might get really negative really quickly, and then all of a sudden turn it around and get super positive.
And we talked about this a week ago, saying that in all likelihood, there's going to be some hiccups, there's going to be some worries. And I was saying, if we get debt ceiling, will it worries in the sell-off? That could be your opportunity. You're getting it down here. I mean, 410. So there's two questions involved here. One, is tech going to turn around? That is going to be answered by NVIDIA tonight.
There you go.
That is not going to be answered technically. Yep. That is going to be answered fundamentally. What does NVIDIA say? Can they live up to the ridiculously lofty expectations that are built into the stock? Maybe they can. They have pulled some, pretty impressive earnings reports in the past. So, I mean, that is going to dictate the overall tech next move, because we don't have any other big guns reporting for a long time. So this is like the last of them. NVIDIA, what are they going to do? People ask me, am I holding my AMD through the report? I've got the full size position. Do I sell half of it before the report, before the NVIDIA report? I've contemplated it. I'm up about 12 points in it, maybe even 13.
Yeah,
it's hard. It would really suck if NVIDIA tanked, and I gave that back on AMD. Most of me is thinking I'm going to hold it through it, though, because I bought that, thinking the AI story is going to continue for the foreseeable future. I don't see that changing. I think if NVIDIA gets hammered, I think it gets bought as well. So
I don't know about that. I don't know. This should be an interesting
It's
report.
Really, it's been a crazy run. I wouldn't hold NVIDIA through the report.
I would hold NVIDIA for the report, and if and I have no position in it, but if you were a large institute, if you had a big old position in this, and let's say you haven't sold anything, not one, you would, I don't even know what to say. Let's say you got your position, let's say under $200. All right, you had plenty of time to do that. On this report, if it rips, I'd have layered offers, scaling up size as high as you all the way up to 320 or what's this next monthly high?
What's the expected move is the first thing.
It's got to be
100. So the first thing you do, if you are planning on trading this through the report, I am not, but if you are, your first move has to be to understand and know what the expected move is. So we do that by going to the options chain, looking at the weekly expiration. We can look at May 26th. We go and we grab what really is the closest one. So it closed at 306. So we can look, options are not open this morning, but we can look at kind of where the 305s closed.
Let me guess.
I can see 1150. Yeah, guess.
Oh.
I just gave it away.
Yeah.
It wasn't 1150. I'm just adding them up, but I gave away half of it.
Okay, 20. Is it around 20, 22?
It's 20 bucks.
Wow.
20, 21, 21. 20 to 21.
So explain what that means on the upside and the downside to that closing price, Dennis.
Well, you take from where we close at 306 and 21 down means the straddle writers start losing money. And usually the market makers, those are spots where you defend, where it's maybe defended, where, the natural, buying and selling of the stock comes into play. So knock 21 off the price. So you get, and obviously we have CC on the show sometimes who's just excellent at this, but you get that range. So add 21 on 306 to get us up. And again, we don't know where it's going to close, and now it's 303. So all we can say is where it closes tonight, you take $20 and you surround it. So we're at 303, go up 20, 323, go down 20, 283. That's kind of the range you'd expect it to trade in if it's going to stick within that range.
And then, of course, would we just see some more profit taking is something that I will be looking for, because I mean, at the end of the day, these stocks have made massive runs, right? If I was in NVIDIA and I had it down there, would I be waiting for this report to kind of ruin some of that profit? I'd probably be ringing the register. All right.
I mean, that's the thought process here. And maybe that's the thought process on why the stock is weak heading into this report, because we've been weak for a few days here. There's so many people sitting on so many profits here that maybe those people are saying, look, I'm not going to risk, losing $50 here on my NVIDIA. I'm going to book those gains and move on. I still think there's underneath demand here like crazy, though. And there going to talk so much about AI in the call.
Yeah.
I got to think if you really get a butt kicking in this stock, that a day or two, I think a bounce happens anyways. I know the valuation's extreme and everybody wants to see this thing trade 30 times, not 65 times. But there's just so much underneath demand. So this is why with AMD, I think it's building underneath demand as well. We know, I put my AMD trade on for the simple reason it's trading less than half of an evaluation of NVIDIA. And I feel like betting on Lisa Su isn't a bad bet. So I still think AMD on the pullbacks. I'd almost rather own that one just from a valuation perspective. But NVIDIA is best of breed, underneath demand. Hard to just say, yeah, it's over. The story's over, even if they miss.
Okay. All right. Definitely, I'm going to
We're
go ahead
all
and take
torn.
us to no.
Yeah. I mean, it's just like it's been up on the AI hype, right? And you're in your 1 quarter. I mean, they've been talking about it. I mean, did they already sell them the chips? Is it gonna, is it gonna filter through this quickly? It's been one heck of a run. Congratulations
It's been
to
a
people
hell of
ahead.
a run. You're
It's been
right.
a hell of a run.
Yes.
I mean, when you look at it, I mean, back near, sniff an all-time high. I mean, even over 300. I mean, when this thing was in almost in double digits in October, 108.13. I mean, that's a very unusual move, and they got high expectations, and they got to say everything right. And
they do,
right.
but again, the underneath demand, and I don't think they're going to say too much. I don't think it's going to come out like it can't come out and just flat out miss and warn. I mean, that's a completely different animal. I don't think that's going to happen. It is priced for perfection. They're going to have to blow it away. And, we can go into the opposite. So the opposite stock to NVIDIA is Kohl's, where Kohl's is priced to disaster. Kohl's is priced to go bankrupt. Kohl's, has a 9.2% dividend, and nobody expects anything from Kohl's. Well, here you go this morning. KSS reports here. Mitch, give us the numbers because they weren't a disaster.
All right, let's go to Kohl's here. Let's get into retail. All right, Q1 EPS at 13 cents. The loss estimate was 42 cents. So definitely this estimate might not compare to what was expected there. Net sales at 3.35 billion, total revenue at 3.571 billion. If we look in what happened here, Q1 net sales down 3.3% year over year, comparable sales down 4.3%. Inventory down, though, 6%. Then when you look at their gross margins as a percentage of net sales was at 39%, up 67 basis points year over year. CEO Tom Kingsbury said that KSS stores business achievement productivity gains during the quarter are due to a lot of Sephora at Kohl's as they continue their sales momentum. So we've seen how Ulta has moved. Of course, Sephora, a big private company there that keeps pushing higher in high cosmetics. And this might be actually helping Kohl's survive the period right now where you guys see those comparable sales down 4.3.
Just expectations in the gutter. What you do see with the gross margins going up, though, Mitch, is you see the cost-cutting efforts working.
There you go.
And I think this is why the number actually may compare. I haven't looked into the details here, but people are talking about a pretty big beat in other sites here. You know, they were supposed to lose money. They made money. So they are cutting costs wherever they can because they realize they need to. That's the good news. The bad news is the sales are dropping. The bad news is, you know, retail is, you know, these traditional department stores, you know, are under siege, really. I talked about being in Toronto on the weekend and, you know, Nordstrom, which was, you know, the big store in the Eaton Center, biggest mall in Toronto, you know, the big heavyweight in that mall, 3 floors of Nordstrom, closing the store, selling, you know, the fixtures, selling everything. I mean, that's just not what you want to see. Now, that's a Nordstrom story, not Kohl's, but very similar businesses here. These businesses are significantly struggling. There's no AI story to be found here. Maybe they're going to say eventually, oh, we'll do AI clerks, you know, and well, the bots and, you know, maybe that, but that ain't coming next week.
That's hard for retail.
That ain't coming next week.
Yeah.
So you look here, and I am long some Kohl's in the long-term portfolio. It has been a disaster. I got to think there's overhead supply everywhere from people just, you know, thinking they're getting their money back. The story is still not good here, even though the quarter, and then we love the cost cutting. We love everything they're trying to do. I think management's trying to do everything right. The problem is it's just in the wrong sector. They're in the wrong area. Physical stores, people talking about the real estate, you know, there's value in the real estate. Well, we heard this with Macy's for years. How much value was in the real estate? How'd that work out? Macy's, you know, was trading $35. It was trading with a P of 6, and they're like, this is a no-brainer buy. I saw it all over Twitter. No-brainer buy because they got the real estate. You know, it's growing. Well, it was definitely not a no-brainer buy. It apparently was a no-brainer sell because this thing is now $14. You know, it's coming up here today. So is there a relief rally here? Absolutely. You know, is there, you know, momentum? Can it follow through? It's massively oversold. Is there room up higher? Possibly. Is there going to be sellers into this? I think so. So am I going to be one of those sellers into this? Possibly. I haven't analyzed it yet. So, you know, sometimes you've got to eat it and move on, but I just don't think there's a good long-term story here for any of these stocks.
People are very nice that work there, but they got the
Awesome
same,
people.
but they got the same like Best Buy problem. Like we have like a Kohl's credit card, and then of course I don't carry it around with me. I don't even know what I bought there. And they're like, oh, well, what about Kohl's Cash? And how about this? And how about 10% off and 10% off to 10%? I'm like, okay, whatever. And I don't even have my credit card with me. This chart, 22 is jumping out to me. I get 22, 22, 22. Pre-market high 21.95. A daily high right there at 22. Another daily high just above it. So that's the onus. It's already up 240. So that's probably already exceeded its average daily range by, you know, or equaled it. So if the bulls, like if Kohl's is like the next, you know, hot retail stocks, and the bulls are going to get in here, 22 bid and just be relentless and push it to 24 or higher. But man, that's a tough level. The new low of the move 2 days ago, $18? You're at 22. That's my number.
Sometimes you got to use opportunities when stocks are rallying significantly to eat your losses and move on. And I may do that today. I have not decided on Kohl's. Is there room to 25 on this?
Yeah, but
squeeze them up to 25. There is room. They're not today, but is there room that this could continue and go up to that? Maybe. But again, just the fundamental story here is broken. You have stories that cool off, and you have stories that are broken. I believe the Kohl's, Nordstrom, Macy's story is broken.
Broken.
Target, not good either. I mean, they were talking about this pride stuff, and we're not going to get into that on the show. But I mean, we saw, you know, what obviously happened with Bud and Bud Light, and Target's talking about, you know, they had some pride, you know, stuff put out, and then people were worried they're going to have a Bud Light experience. I don't know anything about any of that, but all I know is I can see this stock continuing to go down here, Target. Retail is struggling. So we have bull markets here. Don't kid yourself. These NASDAQ stocks, the AI story, but traditional retail is struggling big time. Traditional retail is all in bear markets. Traditional retail is pretty much in a recession.
And why though, right? Let's just think about it, right? What has really come to has taken off in the last 5 years? I think it's all about the D2C model, right? And in the long run, I know Joel talks a lot about things downsizing. Well, the truth is, I think these stores will be downsizing in the future also.
I think
It's
they
going to
have to,
be
Mitch.
smaller and smaller stores to try to manage more and more of the margins.
Yeah.
It's going to be the only way these stores will survive. They can't be having these massive stores with 10 customers walking around.
Yeah.
Let's just be honest. That's not a sustainable
Unless they're
model.
Dillard's. And we have no idea how Dillard's does it.
They're like
You go into a Dillard's.
Maybe our Crombie model is more like a better
maybe.
model, right? A smaller store, right? They reported earnings today. Let's go to theirs. EPS 39 cents, beating the loss of 5-cent estimate. Sales of 835.99 million beat the 814.53 million estimate. They raised fiscal year 23 net sales growth guidance from 1% and 3% now to 2% and 4%. Also raising fiscal year 23 operating margin guidance from 4 to 5 now to 5 to 6%. So you guys are seeing at least a smaller retail model, at least able to beat pretty good on that EPS.
Yeah, again, is the story here a different type of company to a certain extent? It's a better story. It's still a retailer, though, and retail is still under pressure. And you still look at long-term investing in Abercrombie and Fitch, and we're in the same spot we were 8 years ago. So it hasn't, been like, it's not a tech stock. It's not an AI story. It's not any of that. So I think you're still using these opportunities to sell as opposed to buy. Up 17%, bag holders all over the place in this puppy too. Can you squeeze them up to 28, 30? Maybe. I'm probably not shorting the stock, but if I was long Abercrombie and Fitch, I'd probably sell it today.
You got some nice confluence here with that initial spike up to 27.75. You can see that on the chart on the left, and you go to the chart on the right, the daily chart, and you get into this area here. High at 27.30, a high at 27.61, all the way up to 28 today. I mean, the other thing would be, I don't even think you're going to get back to that 27.50. I think you struggle to really open over 27. The top of yesterday's range, that's a ways down at 23.43. But man, I don't even, if you had a chance to sell this in the 27 handle, again, I don't know. Be take it. That's a big move for 8 and F. I don't know. Can they get an I in there? Abercrombie.
AINF?
Yeah.
That'd be a game changer, Joel.
Just change the symbol.
AINF
That's
now.
all they need to do.
Yeah,
change
we
the
dress.
symbol.
Yeah, we have clothes for all of your bots.
You guys.
Your AI. We got the clothes. We're doing the whole section to dress up your bots.
There is an actual area in here where AI will come into play, right? In the long run, maybe AI comes really into play into design, right? Because let's say if you're looking for areas and you're like, okay, what do I wear today? Why not just ask an AI what is a good thing to wear, right? There's so many people out there that are very, and I don't mean to say it like this, but superficial, right? They want to kind of look the best. Why not bring AI into design?
And
I know they're already bringing it. So
all the clerks will be AI. I mean, we're not.
You know what I think will happen, Dennis? I think what will happen in the long run, I've heard companies talk about this, is let's say if you went up to a smart mirror and it just showed you what it could offer you in that store and how you would look in it. Then you would just be like, okay, I'll take that. I won't take that. Let's keep it moving. And there you go. The future,
we need to invent those smart mirrors or perfect those. Let's do that. Let's quit this show. We're gonna go.
You see,
smart
I got ideas,
that's the best
baby.
idea
Money
Mitch.
They don't call me Money Mitch for no reason.
Dennis,
that's a good one.
If you ask ChatGPT what you should wear in the morning, they would
a Benzinga shirt. That's
what
it would say. Look at this. I represent.
It would say which one of your 3 T-shirts do you want to wear?
Which Benzinga shirt?
And then it would say, when you were at Nordstrom the other day, instead of looking at the mirrors in the furniture that was for sale, you should have bought some clothes that were on sale.
I bought a pair of socks.
You bought a pair of socks that had holes in it. How do you get holes in your sock after one
day and they got a hole in them?
I I like Nordstrom's. I mean, I don't know if they're going out of business or what, but I
I don't
like
think they're
Nordstrom.
all going out of business, but there's definitely some of them going out of business.
Where the AI will come in there is like, and you already have it, like the checkout, right? They're not going to need people there to, like if you want to try on shoes, that little robot will come up and say, "Oh, what size do you need?" And then the robot will go
It's all going
back
to be robots.
and get the shoes, and then the robot will check you out. So that's where the AI is going in the retail. As far as that goes, but we covered the A and F. We got some tech stocks. So what about, let's talk Palo Alto.
Yeah,
I
let's go
mean,
to Palo Alto. But before we go to
woohoo!
Palo Alto really quickly, I do want to kind of mention the big event that we have today here on Benzinga.
Yeah.
Don't miss it today, guys. We have, of course, the Benzinga Titan Sport Betting Summit and Awards. We'll be having DraftKings on there. Don't want to miss that. Gambling, right? BetMGM. Who's used BetMGM before? I know I use it. And we'll be getting into it with different analysts in the sports betting. They will be the moderators for a lot of these events, so you don't want to miss this. Big public companies joining us. Sports Radar will be there also with a moderator from the NBA. We'll have the head of gaming and new business ventures from NBA. Don't want to miss that. And definitely get on over to catch me at the end doing a great interview. I will be getting it with Eli Gaming. Don't want to miss that. Legalization of sports betting, the future of tax money. What regulations should we be watching in the sports betting world? Don't miss today, Benzinga's Titans, and a little special event, of course. You'll also have Jake Paul on there with Jason Raznick. You don't want to miss that, team. Hit the like button. Let's keep it going, team. Let's
give a shout out to the Raz. He's in the chat this morning.
He's he's awake. What?
He's here. Oh yeah, Raz giving her, man.
Give it there.
Raz is always awake. That guy works, man.
Look
he's
at
all
that.
over the place.
He said he's lost some money, though.
Raz.
He's lost some money doing the little sports gambling life. Don't worry, Jason. Hit me up. I got you, man. I'm all about a little bit of some gambling, whether it be trades or a little sports betting, right?
Yeah,
it's all gambling.
I just want to mention the DraftKings the other day. The analyst pump got it over 26, and they sold into that one pretty heavily. Back down support just under 24, but it's been a nice run in DraftKings, and I mentioned every time, man, Penn just not. I mean, it's had a little bit of a rally, but just not participating. But it's been a nice move in DraftKings, DKNG.
They said that Jason AI in the chat, man, is pretty quick.
Yeah, we don't even know if that is really Jason. Right?
That's the life we're living.
It's AI Jason.
Yeah,
it's AI.
That's probably it.
Maybe
yeah.
AI Jason.
Dude, I'll tell you right now, I'd be scared of AI Jason.
This could be AI Jason.
I don't even take that. That's probably like a little robot. He programmed it.
That's what I'm saying. It's AI Jason.
It's so
right
easy.
there.
You know what we need more of, right? We need cybersecurity, baby. Let's go to Palo
AI
Alto.
Jason says it's him.
Oh, because it's programmed to say that.
So now we can believe it for sure.
Now
it's like
we
all
can
those
believe it.
fake
Now
triple
we
D
can.
accounts out there that'll keep popping up everywhere. I finally got my blue check mark because I had to go buy a blue check mark because there was literally somebody said there's 10 fake accounts of you and they're all asking your followers for money. I'm like, holy. So I finally ponied up. Elon Musk won and I bought Twitter blue just to slow him down. So now if you see the fake or the AI triple D trader accounts, ignore them unless they have a blue check mark.
Well, there was a nice 4 level kind of support here on Panda W, of course. I was looking at it, missed it on Monday, but it's already taken
look
off.
At that. You're right.
You see that, Joel? You see that?
Yeah.
I've been pointing them out more, Joel. I catch you, man.
Keep it simple. Keep it simple.
Look at that. Nice little support around the 188.78. You got a lot of bottoming action right around there, 32s, 30s. Multiple bottoms, and then it really started going right back to resistance. I'm sure Joe will point out the resistance for you guys. Let's look at it. EPS $1.10 beat the 93-cent estimate. Sales of $1.72 billion beat the $1.71 billion estimate. They do see Q4 adjusted EPS at $1.26 to $1.30 versus a $1.20 estimate. Now, total revenues just slightly above the revenue. The top line at $1.967 billion versus a $1.95 billion estimate. Also raising the fiscal year 23 adjusted EPS on the top end at $4.29 versus a $4.02 estimate. total revenues at 6.88 billion to 6.91 billion versus a 6.89 billion estimate, all looking pretty good here on the guidance. I've been seeing snow kind of push off. Of course, they have earnings tonight. So we'll see what happens with that one. But Pan W doesn't look too bad here as it's going for 200.
Again, cybersecurity stocks have been given the pass from valuations because we know how much we need cybersecurity in everything. So we've talked about this before. You know, you've had this bear market and high valuation stocks. Palo Alto Networks is not in the bear market. It's been unbelievable. You know, FTNT, another one, held up very, very well. CYBR is kind of held up. It's kind of just in the same spot, though. But where you've seen some of these valuations that trade 40, 50, 60 times earnings or even higher than that, those stocks really came off in 2022. A lot of the cybersecurity stocks held up well. So does this continue to hold up well? I think so, but you're at a major level of resistance, Joel, which you can give. That 200 is psychological, topped out there multiple times. It's hard to buy it up here. Joel's on mute.
Mute.
He hasn't done it for a while, though. Catch him a break.
I know. He's been doing better.
I wasn't here, so that's why I haven't done it.
He wasn't here. That's why I did.
The thing that Mitch was talking about, you know, whether you're right or let's say you took a stab at that area that he was talking about, you know, you put a stop in, you know, at that 185.75 low, because if it gets into the, you know, if it starts to get into the gap area, then that changes. So the thing that, you don't know if it's what's going to happen after earnings, but you know what you do know, if you were trading it intraday or whatever, you're buying it at that area. You have an out. Now you're getting a pop, and what's interesting about it is it's popping. It's up 838. Pre-market high 199.50. You see this $200 area, but Dennis is not really backing off yet. I mean, someone is bidding it up here, 831. So with this one, maybe they'll keep it, you know, buoyed through the open. They'll take it through 200. Oh, this baby's going for the all-time high.
Well, they always try to shake.
Yeah.
They'll shake the shorts and then they'll shake the longs.
Yeah, and then all of a sudden you're at like 202.80, and then you're like, wait, locked down at 200. What's going on here? So that, you know, play the momentum. 200 is a swing number. There is resistance there. As always, we'll be keeping an eye on the pre-market high. That we'd had a little rally in the S&Ps. It looked like we were going to separate ourselves from the lows of the pre-market session, but that quickly ended here. We're down 18 handles, 4140.75. And as I mentioned before on the S&Ps, if you can find support in here before 4120, 4122, you let me know, because I'm not seeing anything there on the dailies. That was where we bottomed on our last push over 4,200. That's what I'm looking at today. There's actually 3 lows between 4120 and 4123.
Well, let's
get 35. Let's get Ivan.
All right, let's do that. I was going to drop into it, but no worries. We can go ahead and get right to our guest today. You guys out there, smash the like. Let's keep it going right here on Pre-Market Prep.
Ivan Feinseth from Tigris Financial Partners joining us here on Pre-Market Prep, a longtime guest, and you're one of our more bullish guests, right? And you were back on in March. You did your homework. On March 15th, we were at 3,800, and you said, guys, we're going to get another look at 4,200, and you know what? We did. But convince me that we're just not at the top of a long-term trading range here, and we're going to get another look at 3,800.
Oh no, Ivan's on mute. The old
no,
mute
he's
trick.
not. I mean, he's just probably having a little bit of mic selection issues. If you can go to settings down below, Ivan, for me, the little wheel. We're gonna go to audio and just make sure that your mic is selected there. You'll see a little green dot there that's just showing up the volume as you speak. So that should take 2 seconds.
Wait, he's figuring it out. Not yet. It's finding the wheel.
How about now?
Oh yeah, we got him. We got him.
Done deal, baby. Let's do this.
Yes, I had to pick the right mic.
I got you, Ivan. I'm ready.
Thank you. All right, so there is a very strong underlying trend and it just seems there's a lot of obstacles in its way. And
Mhm.
I feel the debt ceiling is more an obstacle of focus than an obstacle of the market, and this wants to be contended with. It is an issue, obviously. They're going to raise the debt ceiling. They never have not. So there's obviously a lot of political posturing that continues to go on. You got Janet Yellen now just waving the red alarm flag that we're going to default. The government won't default. And in the worst case, Biden could invoke Article 4 of the 14th Amendment, which the 14th Amendment has to do with immigration, but in some way, it does. Article 4 gives the Treasury the ability to spend through the debt ceiling. So the government's not going to default on their interest payments. People's Social Security checks and other government payment checks are not going to bounce, but it is the focus. And I just think the market likes to look at whatever, near-term obstacle. But we have gone through another quarter of better than feared earnings.
Mm-hmm.
There's been some pullback, some caution. And again, companies would rather lower expectations early on so they can beat them later in the year, lower their own bar or hurdle. And I think we're seeing a lot of that. Yet we're seeing key strength again in companies that drive our economy forward, which is the tech industry. And Microsoft is hitting all-time highs again after, calling for caution in PC sales and a decline in subscriptions for Office and cloud migration. I think that IT spending can pause. It never really stop because we need constant storage and the ability to access things faster. And while AI is a powerful buzzword, it's the next big buzzword following .com and every other kind of buzz concept we have had. But in the 90s, when the .com bubble was building, and Jack Welch, the CEO of GE at the time, said every company is going to have to be an internet company. And Tom Siebel, the founder of C3 AI, has said now every company is going to be an AI company. Every company is going to use AI to look for patterns in data, to look for predictive analysis, to uncover sales opportunities. So this is why I like a company called Monday.com, which is it's actually a cloud-hosted, low-code, no-code database and application platform that are building AI tools to create the ability to do AI analysis and overlay on the databases and the applications that you build. And the low-code, no-code concept makes it easy to adopt. Now, most of the adopters for Monday are using either skilled IT people or IT outsourced like consulting firms, but you can subscribe to Monday for as little as $8 a month and start building applications and databases, and they're going to have an increasing AI tools at all different levels of sophistication. So this is an interesting play. It got an AI kind of pop a couple of weeks ago after announcing earnings and discussing this, which is what I highlighted in a prior report in April, and they kind of came out and said this in May. So this is an interesting company.
Love it.
And
I want to talk to you a little bit about this, Ivan. I think it's a really interesting play here that you're mentioning with Monday.com, because one of the things that I've been talking about it, and I've been talking to a friend of mine that's kind of like a headhunter, right? He looks for really good talent across like different industries. And I think that one thing that we'll definitely see AI come into is companies like this that help HR, help that kind of background work, right? Because if we could really cut out, and it sounds bad, but cut out the workers and have technology work for us.
Well, hold that thought once, because AI is not going to take your job. A person using AI is going to take your job. So we're going to see this elevation of skill sets. And with that comes elevation of income. For example, AI is not going to replace graphic designers. A graphic designer using AI is going to replace a graphic designer not using AI. And that's the opportunity both for workers and for investors.
But
Yeah,
what
and I think
about
this all.
I just
Go
want to go expand on that because I kind of disagree here. Because AI, it's not like it's one for one. You can have an AI program that could replace maybe 10 graphic designers. So you have one that's efficient.
There's be an increase in productivity.
Yeah, but that's a problem for the little guy. One, it's definitely a problem for the uneducated. That's going to be a major issue for people going forward. Is there's going to be the gap where the education. But two, I worry that one AI, obviously system could come in and replace 10 graphic designers. Well, now you have one guy running that program and you have 9 graphic designers that are gone. So I do think there's a concern here that, we could have, labor issues here if AI continues to expand.
Well, I mean, we all want to elevate our incomes and positions and to more advanced work, but there's still a shortage of labor. There's still a shortage of skilled workers in construction and home remodeling and repair and everything else. And those are not also going to be replaced by robots anytime soon. So AI is more of a bot rather than a robot, driving force. So there's still a shortage of mechanics. There's a shortage of technicians in almost every area and every field. So there's still a lot of need for hour.
We're good. I think I agree. We're good in the short term. Like we're needing, we don't have to worry about this next week. It's like 5 years from now, though, where are we? 10 years from now, where are we?
Yeah.
That's kind of the question I have. I think everybody has with AI. Where is this going? I think nobody has the answer to that, though.
And I always say we've all seen Terminator, so we do know how it goes.
Dennis is mentioned.
I'm scared, man.
Ivan,
Skynet's coming for us, Ivan. Skynet's coming for us, Ivan.
It very much could be.
But let's talk about, I think we're both on the same page that AI is going to continue to grow. What companies are we buying to profit from this? You can think NVIDIA, maybe AMD. What other ones?
Feature play here. They empower. You're looking at, so the key application builders and the users of AI like Meta, Microsoft, Google, they're being empowered by the NVIDIA GPUs. So all of these like AI platforms are using NVIDIA's processing power. NVIDIA is a main play here, and that's why the stock has also done so well. And they announce earnings tonight after the close, and I'm sure that's going to be very closely watched and listened to about what this opportunity looks like and the ongoing adoption. C3 AI is interesting. I mean, the stock went all the way down to $17 on being called out for accounting issues by a short sell Hindenburg Research. The stock has more than snapped back, but this is an interesting AI play. And then there are ancillary AI plays like companies like Monday, certainly Salesforce.com, all of these application and database platforms, because the AI applications are really used to look for patterns in large pools of data. And so companies that help create or manage large pools of data are going to then offer the ability to either use tools offered by them or add on AI tools to try to create opportunities from the data. I mean, even early on, Amazon used a form of AI to connect what you bought and saying, well, people who bought this item that you bought also like these other items. And it was a way of uncovering more sales opportunities. It started with books and then all the other items. And then it looks for listing. Meta looks for likes and looking for patterns to provide information to companies that are, looking to new sales opportunities to connect with people that it's AI predictive or be most likely to be at least receptive to looking at your products.
So, Ivan, I noticed here on your background, it says Tigris Financial Partners, but under your name, it says Tigris Financial Artificial Intelligence, CIO.
Oh, it says just intelligence, but yes.
It says
the artificial.
You catch it on there, buddy.
It's powered by NI. The work I do is powered by NI.
No intelligence, right?
No, natural intelligence.
Natural intelligence. Okay, so this is what I want to ask you about. So we had the internet bubble, right? We had going back. I know you're around now. Triple D was around too. Mitch probably wasn't born yet. And where are we in this stage in the AI craze? Compared to because the internet, you had to run up. You had to come down. You found the survivors. The survivors, man, if you would have invested in them, you'd be whistling Dixie all the way to the bank. Where are we at comparative stages, AI versus the internet bubble?
I think that the companies that have the resources and are already working on leverage this are Amazon, are Google or Alphabet, Facebook, Microsoft. And then companies like Cisco are using AI for smart routers and everything. As we move to the more software-defined capabilities, that software-defined capabilities are going to be driven by AI. I mean, Jensen Huang, the CEO of NVIDIA, talks about software writing software, which is also fascinating and scary at the same time. But so, companies that you could see have an opportunity, and it's all, again, every company in every way. The cruise industry is looking at AI, and the hotel and casino industry looks at AI to maximize occupancy, to maximize player interaction, and the casino industry to better know when to comp players or when to let them go and bring them back, which was something that was pioneered a long time ago by the CEO of Caesars in the 90s. To use AI for predictive outcomes for how players will respond to comps. So it's been around, and it's just the computing power is enabling it to be applied faster and better and cheaper.
All right, so I want to pivot a little bit here, Ivan. Of course, we saw the news that came from Micron on Monday, and I'm starting to get a little bit concerned that we're going to see a little bit more of this battle and trade war expand. What are you thinking about that between China tech stocks and U.S. tech stocks?
Well, it is surprising to me that Xi Jinping is almost taking a great leap backward in reversing Mao's great leap forward, in the sense that he is kind of alienating companies when, you have had Michael Dell say that they are looking to move away from China, and their customers are requesting that their products be built with not in China or not using Chinese components. So, I mean, if your customers are asking for you to move away and you're moving away, I mean, you would think a good businessman would, if Xi Jinping were more business focused, he would say, hey, what can I do to keep you rather than alienate you? But it's going to spread out to other areas. You have Apple making a big move into India and also into Vietnam. But companies are going to other Pacific Rim companies. They are moving out of China. And you're just going to see that, sadly, the pandemic taught us that it was not good to be so China supply chain based dependent. And I think if it's the only possible outcome, companies are going to move away. And if China were to reverse their views and say, hey, no, we're open for business, you're welcome to come here, still there would be some suspicion. But because the underlying issue that everybody has to deal with in doing business in China is this forced technology transfer. But I mean, the lure of cheap labor drove them there, the forced technology transfer, and somewhat of an anti-business climate is driving them away.
Ivan, before we let you go, you mentioned Norwegian Cruise Line here. Airlines have had a little bit of a bump. Now, we did get some negative news out of China regarding COVID, but talk about your technical and fundamental setup in NCLH, Norwegian Cruise Line.
I was just attended an event with management last week. They launched their newest ship for their luxury Oceania line. They are introducing the most new ships of the cruise line. So I think that the consumers want to travel. We are seeing this major shift back to spending on travel. And it's not only the pent-up demand when consumers couldn't travel, but a reprioritization of what people want to spend money, and they want to experience this. And if not now, when? So I think you're going to see this travel trend exist for a long time. The cruise industry offers the consumer the best value for their travel dollar, an all-inclusive cruise with food, entertainment, lodging, drinks, is a great deal. Cruises are fun. They also have a very powerful social connection that people like. So the cruise industry has a tremendous opportunity to gain share within the overall vacation. Cruises are 2 to 3% of the entire travel market. So they have room to grow.
All right. Ivan Feinseth, CIO of Tigris Financial Partners, joining us here on Pre-Market Prep. Always a pleasure, Ivan. We'll get you back on again real soon. Thanks for coming on.
Thank you for having me. Always fun.
Right. All right, it always is. 41.40 is just stuck here, Dennis. Just off the lows of the pre-market session. Are you seeing anything out there? It
A
balances or
lot of
anything?
weakness in the banks, a lot of weakness in tech, which has actually kind of been the opposite because we've seen those go opposite direction. That's not happening here today. We've tech weak across the board, except for Amazon. Amazon is trading higher. Mizuho naming it their top pick. Also, I don't think it hurts that you're seeing Kohl's bounce here today too.
And how is
Again,
Kohl's
you know, we see of Amazon, we don't think of them as Kohl's, but it is a retailer. So I think you're seeing this retail rally here this morning. So you're definitely seeing retail. So what's strong is retail and oil. What is weak is banks and tech. Banks really getting hit. Citigroup's down 1.33%. I did see it. They were
Yeah, we got a breaking news that came in there at 8:30. It hit Citigroup to spin off its Mexico business through an IPO. It has Banamex, so it's trying to go ahead and spin that off, and this is definitely affecting them, getting a little bit of a hit here. Came in right around 8:30.
Yeah, I saw that too.
Hey,
Nvidia's down.
Yep.
AMD's down. All the big guns are down except for Amazon, Google, Meta, Microsoft, Apple. It's a sell across the board except for Amazon day.
One other thing I want to ask you before we go to our TradeZero segment. I mean, Triple D, what do you think of this move in Pepsi? I mean, holy mackerel.
Not just Pepsi, Joel. We talked about this, the consumer staples. They have been getting hit hard. And again,
your value
people
trades.
say, oh, it's down 1%. That's not bad. Consumer staples don't move a lot. This is, you've got to compare to what apples to apples. When you're seeing, you know, boom, like Coca-Cola take a 4-point hit or 3-point hit in 4 days, that's significant. And what you're seeing is, you know, this market has moved to risk on to a certain extent. So money that was hiding in staples. But what is also the concern here, I think, is just there's just competition here. I mean, we're still talking about rate increases potentially here yet. So, I mean, I just don't know why. I've said this before. Why do you want to have Coca-Cola? Why do you want to have when you can go and get, you know, 4.5 or 5% in cash? So I don't see why you would take market risk. So I don't get the consumer staples, why so much money has been hiding there. Utility stocks, same thing. I don't see why the money has been hiding there when you clearly see that there's alternatives to that. Now, I get why money's hiding in tech, or not hiding, going to tech, because they're looking for money for growth. But you're not going to get the growth in the Cokes and the Pepsis and the Procter &
No,
Gambles.
not at all.
And you're paying 26, 27 times earnings for some of these stocks, hiding out in there saying, well, they're safe in a recession. Well, you know what else is safe in a recession? Cash is safe in a recession. So, I mean, I've sold all my Procter & Gambles and Cokes and consumer staples a long time ago, utility stocks too, because there's no reason to own those when you get 5% cash.
Yeah, no, it's and if there's a rotation going on, like if you know, if they're jumping out of these stocks, which have been the safety trade, and they're going full risk on here with the growth stocks, man, we better get a rally. We better get a rally soon, or else this trade is just going to be an absolute disaster. Or unless they're just taking the money off to, you know, just to, you know, to make it safe. But
why not go to cash with it?
I mean, look at that move in Pepsi.
I can't believe this hasn't happened earlier. I've been calling for it, and it's finally maybe starting to happen. But I have no reason to own any stock trading 26, 27 times earnings that's giving me a 2 or 3% dividend only. Those were awesome when we were in a 0% environment. We're not in that environment anymore, and we're not going back to that environment anytime soon. The only way they're going to start cutting rates in the second half is we go into a serious recession. We go into a serious recession, maybe everything gets hit. So
we got to stop going up first before we cut. We got to pause. We haven't even paused.
No, I know people just putting the cart before the horse. That's it.
Yeah, and that's exactly it. All right, guys, let's go ahead. Let's go to our TradeZero segment. We got a couple of earnings reports still to go through. If something's on your radar, make sure to throw it up in the chat. All right, first up on the list, let's go to Toll Brothers here as they reported this morning. And I'd like to hear, of course, Dennis and Joel's outlook if they like this now. Toll Brothers
I've been wrong about the
EPS
home builders forever.
$2.85, beat the $1.91 estimate. Sales of $2.51 billion, beat the $2.06 billion estimate. Toll Brothers expects deliveries of 2,350 to 2,450 units in Q3 and boosts their full year 23 delivery outlook from 8 to 9,000 units now to 8,900 and 9,500 units on the high end.
And
So
lumber
one thing
prices haven't
I would say
floated.
I've been wrong too. I don't trade these at all. I'm not going to stay. I'm going to stay away.
Lumber prices have imploded, and that's why I was going to build my shop when I built my house, and I was like, no, I'm holding off because lumber is just stupid. I'm not paying $10 for a 2x4. I went and got the quote on the lumber package, and it is just so much cheaper now. So one thing that we've had deflation in is lumber. So I went ahead with the build because lumber price is coming down. So lumber prices coming down has helped the home builders tremendously. And I think that's what we didn't consider here, Mitch, too, is that some of the labor is still ridiculously high. Some of the other inputs are still ridiculously high. But, you've got 25% of your costs probably lumber. That has come down. That helps. So that's one reason why I think the home builders continue. People who are maybe holding off even on projects 6 months ago, like, well, it's come back now. So I talked to the lumber yard and they say it wasn't busy a few months ago. They're like, it's picking up. And that's a lot to do with the lumber prices. I mean, you go 2x4 and get $4 2x4 again. So in Canada, we're talking Canadian prices. But during COVID, got up to like $12 or $13 for 2x4. Absolutely ridiculous. So, I mean, lumber prices have come back in. That helps. No recession in home building. Not yet.
I don't know about all that stuff, but I do know that the street was leaning selling into the report. You hit a recent high at 67.54. You took a breakdown. You had a 4-point break down to 63.54. You're getting back half of the move right here. I mean, a triple D note here. If you're waking up and you're buying this thing up $3 at 67.50, you're doing it wrong in a stock that only moves $1.50 a day. But this 65.5 area, there's no daily highs or lows there, but it's halfway back. So the bulls got to get this thing 65.5 bid and work its way towards 66. Or I look a little bit of a fade here in Toll Brothers, TOL.
All right. So one thing I do see here is urban up. So keep your eyes on some of the
retail
stocks.
is hot today. This market, if anything, and we see rotation start like rotation every day. We're down. Even yesterday when we were down 35 points, there was still stocks that were up. So the rotation is still wicked. Today is the flavor of the day is retail and oil. We can clearly see it. Some days we come in and there's just no, it's just all random. There's no theme. Today, clearly retail is a theme. We got Kohl's killing it, at least their lower expectations killing it. Urban, Abercrombie and Fitch, and then you got Macy's and Nordstrom's trading up on those. I mean, retail up all over the place here today. Oil's having a good day, and then everything else just doesn't look great. So, I mean, rotation. That is what this market is. It's like why the index and why the S&P seems to go nowhere. So that continues. So, anyways, I've got another call here, and it's 9 o'clock. I'm gonna let you guys finish it up.
No worries.
All right. If it's, I wonder how their pizza sales were. Did they say anything about their pizza sales?
If it's anything that I've been eating, I definitely been eating some pizzas. So I would say definitely increase there.
All right, we got a pop here trading at the highs of the pre-market session. That's 30.38. I mean, it's been in this range for a long time. If this thing has a sustained 30 bid, then let it go as far as it can. If it doesn't hold 30, perhaps, top of yesterday's range, way down at 27.39. So that's a look at Urban Outfitters, URBN.
All right, that's probably going to do it for us. Last look into the market. What are you seeing there, Joel?
Now we're leaking. It's a slow leak. It's nothing there at 41.40, nothing there at 41.30. I mentioned the trio of lows at the 41.20 area. Just a question, will we get a little, we always get a little sympathetic buyers off the open and get a little bit of a pop off the open. But that's what I'm looking at here in the S&Ps on the upside. hard to determine what mid-range is going to be when you keep drifting lower and make new lows for the session. But that's what we got. Great show today, Mitch, and I'll let you finish things up.
You got it, Joel. Definitely keep up with, of course, Pre-Market Prep Plus. That's what's going to keep going on. You guys can go ahead and check out my man, Dennis Dick. He goes over to the closing print sometimes. So if you guys haven't checked out that's at 3:30. Now, I do want to let you guys know, of course, we have an amazing event today. Benzinga Titans Sports Betting Summit and Awards, May 24th, today, 11 a.m. Eastern. Invest in the game that, of course, is behind sports betting technologies. We got the chat with Jake and Joey from Better. Of course, we got DraftKings CEO. We'll be getting into great conversations with BetMGM CEO. We got FanDuel on there. We got NASCAR. We got the NBA, Sports Radar. You don't want to miss it. Of course, check out my interview. That's going to be at the end of the event. I'm super excited. I got some great questions in the industry. You guys know I know all about the sports betting life. So if you want to catch it, get over 11 a.m. Eastern. It'll be right after our live trading stream. So if you just want to watch a little bit of trading, then catch some great talk into the industry that is, of course, sports betting technologies and the companies behind them. And it seems like we got some major titans in today. I'll see you guys a little bit later on live trading. That's starting up right now. And then, of course, I'll see you guys at the summit today. Titans, baby, we're taking over. And you don't want to miss today's interview. It's going to be really great. And, of course, like I've mentioned, we'll have Jake Paul there. You don't want to miss that. It's going to be a great interview. And don't miss, of course, the book club. If you're not joined already, we're going to be having a great session this Sunday. Do want to throw up the link there for the book club because the truth is we've been growing, baby. Over 500 members now in our book club, and we're going to keep pushing to the next level. All right, there you guys hear it. I'm going to go ahead and leave you guys with a quick little trailer here, of course, about the event. And then I will see you guys over on live trading. Let's see what I can get into today. Yesterday, I played Success on the small account, made a nice little bank. Maybe should have swung traded a little bit overnight. But like always, I'm going to keep battling and catch me on Start Swing Trade. And don't miss the event today.
But I say it's boxing, better, and sleep. And that's my life pretty much. Focusing on the boxing thing makes everything else in the ecosystem bigger.